Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of indices. My name is Vic. Thanks for joining me here. We'll try to cover DXY dollar index, which is at a very critical level. We'll also look at S&P 500, Dow Jones US 30, and let's look at Nasdaq as well. Okay, so let's start with DXY because this is one of the important ones, and it has been taking a lot of people, a lot of traders and analysts by surprise. So what has been happening? Now I've been actually talking about this for a long time, from higher time frame picture. So if you want to find out more about it, in fact, actually, I covered this in the last analysis as well. If you want to find out more about it, you can go and check those analysis out. But let me quickly remind you that we are around this level, which is 89 level. The market has hit the support here, and this is also the previous structure here. We are in a sideways movement, and if the market continues to go higher, and if it actually breaks through this, then we are looking for near about 110, near about this area here. That's what the market could be targeting in few years time. But for now, because you're looking at monthly time frame, we were expecting it to come to the middle of this channel, this sideways channel, and that's where the market is right now. So from 18.9 level, we have been looking for a long opportunity, and the dollar has not actually disappointed us. It has been going up. Another reason why we went for a long from 89 level is because of this M pattern here, which completed here, created a double bottom, and now in this process, it is also creating a W pattern. Now it completed a W pattern here. Let me quickly show you what I mean. So it completed this W pattern, because in our FCP methodology we do not look at double bottom and head and shoulders and all that because they are not quantifiable, but W and M patterns are quantifiable, so we tend to stick to them. So the market created and completed the W pattern here. It fell down, and now because it is going up and taking this level as a support sort of level, we are expecting it to continue to rise higher. Let me remind you that around 91 area there is a gap here. So if the market decides to break this level and this level and this level, then it will try to come back down. It will definitely come back down at some point in time in future. It doesn't matter whether it happens now or maybe at some point in time in future. Okay, so right now what's happening, and what kind of price action can we see? Let's see the structure here. You probably have actually seen on this already because I've been posting it on social media. I posted this on LinkedIn as well, and Twitter, that we have this head and shoulders, inverse head and shoulders pattern appearing on dollar. So this is how it is looking. So we have head and shoulders pattern, and that means that we are at the neckline right now. This neckline is nothing but the previous structure here which was there. Now the market can actually go a little bit higher, right? So this is at a actually very critical level. If it actually goes higher and performs a test, and then we get a confirmation, then we are looking for upward move into 96 area, 95, 96 area, right now this is at 94, and I've been talking about 96 area for a long period of time, so that is quite a possibility. However, if it creates a fake breakout and goes back down, then we are looking for downward possibility into closing one of those gaps here around 91. Okay, so that is why this is actually a very important level. There is one thing which is actually making dollar bullish as of now with the current price action, and let me show you what is that. First of all, the market has been going up, and now it has performed a retest of the previous structure here, and that means the market is expected to go higher. It is trying, but it must go through this level, this particular previous structure level here, before it becomes a proper bullish. However, if I bring in a moving average, 200 moving average, and go to the weekly time frame, we see 200 moving average is right there at 94.78, so near about 95 area, and that is the previous structure level here, so it is possible that market may try to go there. That's possibility. Now once the market has closed above this 200 moving average, you know what is coming, then it is going to be proper bullish, right? And then we will have better chances of inverse head and shoulders playing out. So what I'm expecting is that, because I just fell through 200 moving average last time, I'm expecting it to go to 200 moving average and show reaction to the downside. So If it comes around 200 moving average, I look for a short opportunity on DXY. But for now, I'm simply watching and I'm keeping my bias as a bullish for now. Okay, for now it is still bullish. However, there are certain levels here, and this 200 moving average which can actually just push it down. So I'm being careful. I've been bullish all the way from 1989 to this level, and around here there is some kind of there is little bit of it's kind of like in a warning zone. If you're bullish, then you should be watching this zone here, and if you're bearish, then you should also be watching the zone, because you can look for short opportunities on the touch of 200 moving average. Once it has closed above 200 moving average on weekly time frame, and then we get a confirmation, then dollar can be unstoppable. It can just keep on rolling up, and that's what we can expect. If I go to the daily time frame, still very very bullish. At least looking little overextended at the moment, but again, 200 moving average on weekly can actually push it up. 4 hour time frame, there is a WM pattern which is forming. There was an M pattern here, okay, and that has actually pushed the price up. This is the M pattern. If you're not able to visualize, this is the M pattern which pushed the price up, and this is because the price did not come very deep inside. That means it feels like it wants to go higher, and if that happens, then we will have this W pattern forming, and which can push it to near about 200 moving average of that weekly time frame. If the market decides to go down, then it will have to break through this mid level here, and in that process it will form an M pattern, and it will come back down to near about 93, this 200 moving average, because that has also been not tested so far. So that's where it can come down to. So that's what we have on on this chart. But let's look at what I envisage, because what I envisage actually kind of predicted majority of this move in advance. Okay, let me go to the monthly time frame. On monthly time frame, remember I have been talking about this for a long period of time. I started to sound like a broken record, but this was bullish here, and I don't know what the feed problem is, but because I think it's weekend, that's why it is not showing. But this is also blue. This is blue. This was the signal, and the market is expected to reach first profit target, which is the touch of water curve or the white dot. So you see, the market has reached there, and now water curve has started to show some reaction. That's why we had so far a little bit of downward move, or maybe you can say sideways movement on dollar. This white dot is still available there as a profit target. So if I show you what that dot is, what these levels are. Okay, so the first level is still water curve is actually moving slightly upward, so it can still go back up, and then water curve is the white dot is near about 94.94. Okay, so that is still possibility. So that is near about 95 area, and that's what we have been talking about for nearly a year now. If I draw Fibonacci on it, that lines up very nicely with 38.2 fib level as well. So it's still a possibility that it can go up, and that is why I'm saying it can actually go back up to 200 moving average on weekly, and that is giving me bullishness on dollar. But I'm being little careful now, because this white dot, 200 moving average water curve, can actually push the price down. Okay, so that's how it is looking on monthly time frame. There is something which is very very interesting happening right now, and this actually does not happen very often, so you have to pay attention to this. If I go to the weekly time frame, what has started to happen is that market has started to become bullish. You see, this is bullish. This is the first time it has done blue after a long period of time. Let me clean this up, okay, and show you this. It was last red around here, last blue and red around here, and now it is changing here. And this shows good bullish momentum in the long run, because we are looking at the weekly time frame. This is the first time the blue color is coming in. That means the market is expected to go higher, and it did actually, but it was able to reach this profit target, and it's this profit target as well. It can continue to go a little bit higher, so you have to watch dollar. If the dollar actually causes a breakout above that 200 moving average, then it can just push up all the way to previous highs or something like that. Okay, so that's what we have on dollar, and I will keep you updated on this on various social media channels. I'm there on LinkedIn, Twitter, so on Telegram as well. So I'll try to update you there. Feel free to follow me on those channels. Okay, so that's dollar. If the dollar is going to go up, then what we can expect other markets to, show some kind of effect. Now on let's start with the S&P 500. On S&P 500, if I go to the monthly time frame, actually if I go to the 12-month time frame, this is what I mentioned in the previous analysis. At the start of this year, I said, this candle actually shows that the next candle probably is going to either bearish, or it will have, some sign of rejection from the top. So far the market has started to show some weakness. We still remains to be seen, next 1 and 2.5 months, whether it actually comes down to, create sign of rejection or bearish candle on 12-month time frame. That is on S&P 500. Okay, let's look at on 3 months time frame. If I go to the 3 months time frame, there was a rejection, sign of rejection here at the top. You see, this was a very good one. Now market is trying to go back up. It is trying to regain its ground, because you see there is still a lot of hype in the market, because this thing actually has created wrong mindset in the minds of traders, and especially the new traders, that the markets will keep on going up by the dip. Stay objective. Stay objective. Look at the charts, because charts do not lie. Always stay objective. If this is a sign of rejection, this is a sign of rejection. Nobody can deny it. Unless I see a close above this candle, I'm still thinking that this is getting weaker now. Okay, if I go to the monthly time frame, this is a very simple thing. This is what I posted on social media, on LinkedIn as well. I posted this actually a few weeks ago, even before it actually started around here. Okay, this is the Nasdaq one. It was hanging on there. We'll look at that. And this was US 30. It was hanging there. It was just rejecting from those trend lines. And there was a silver one as well. And S&P 500. I don't know where that is, but I did post about S&P 500. Okay, just look at what's happening. The market is kind of overstretching here. Okay, this is a kind of, you can say, channel or wedge, whatever how you want to read it. It has broken through it. This is an engulfing candle, very nice engulfing, monthly engulfing candle. The market is going back up to do what? To either test this trend line, which has been broken, or it will go to test one of the Fibonacci levels along with the support level. So if I just show you where that is, so that one is right there on the close of this candle. So this is the level which is very, very important. Near about, let me actually put a line there so that you know. Okay, so that will be around here. That's 4400. So market came here, tested that, and now has started to show some rejection from there. Okay, so this is what I posted on social media, that the market was actually and struggling with 20 moving average, which is the mid of the Bollinger Band. It broke through this trend line. It went up to retest it, fell down, created another engulfing candle, went back up to retest this previous structure, which is around here. Now it is showing sign of rejection. Why this went up is because of this 20 moving average. So it is looking very, very weak right now, but it remains to be seen whether it actually goes back up to create a double top, or it goes back up to create a divergence sort of thing, return to normal sort of phase before it actually starts to go down. So this is getting very, very interesting right now, and my bias is turning towards the bearish, but I'm keeping it very keeping a very close eye, and I'm staying objective in this market. Okay, because the market momentum is still bullish, and this is simply a very small correction. But remember, all the big moves always start as a small little corrections first. Okay, so it's worth keeping an eye on this. That's S&P 500, and if S&P 500 is doing something like that, usually US 30 is also doing something similar. US 30 is actually quite interesting. It's actually much better than the previous one. Why? Because at the start of this entire little correction downward, this is what I posted on LinkedIn and other places, that this was the first candle which was going to close below 20 moving average. This was the first one in months. Okay, and that is a rare opportunity, right? This was the first one which was near about in October 2020, and since then it has not been able to close below. This was on the 20 moving average. This was the first one, and that shows me enough bearish momentum, something is changing. It may not be huge to the huge correction or reversal or something, but it is something which is telling me that it is getting weaker. Now we have alternate candles, and we can have another week of positivity, like another bullish candle, and then I'm looking for a bearish move down. But again, similar sort of thing, pretty much like S&P 500. It remains to be seen whether it actually goes back up to create a W pattern, or even like create a divergence sort of thing. But this is getting weaker, and I'm keeping it on my list. This level at the moment, this one, is very important to be watch out for. Let me quickly put a line there. So this level is very, very important, which is 35091. That's a very important level, because at that point in time it will create a kind of like head and shoulders pattern. If you're not able to visualize that, let me actually show you what I mean. So this is the left shoulder, head, right shoulder, and if that starts to happen, it can roll down. And I covered some of the scenarios in the previous analysis. You can refer to that as well. Okay, next one is Nasdaq. Okay, so Nasdaq is actually hanging on to 20 moving average and the trend line. There is a trend line which is right there, and it is hanging by that, like just around there. It is just hanging by that. Okay, but in comparison, it is still a little more bearish, bullish, because so far it has not been able to close below 20 moving average. And if I look at the monthly time frame, similar sort of scenario, huge bearish candle, little bit of retest, going back up to what level? Going back to exactly this level here on the close. That's level. That's 14965, or maybe like you can call it like 1500, 15,000. It retested that, and now it has started to come back down after retesting. So this is also looking bearish right now. So I'm again keeping it on my list. I'm focusing more on US 30 and S&P 500, but these indices are like jointed together, so that means they can actually start to move in the same direction. Let's quickly look at what I envisage. So US 30, this is still looking like reachable. This target has already been reached, but it can fall down to what a curve. Let me just quickly zoom in. So this is alternate candles. This is an re-entry candle that I call it. This is simply a retest, like kind of like return to normal sort of behavior, but it can be a bull trap. So be very, very careful. So far, this is still red. We have been able to take this position and reach this profit target here, all the way from here to this level. And actually, this is, if you had taken this one, this was near about 899 something points. Okay, and um, let's look at S&P 500. S&P 500, similar sort of story here. So the weekly, this target has been hit, but it can fall down to the water curve here. Everything is red at the moment. Look at this. This is red, and Nasdaq has also reached the profit target. Now it can actually go back up to test this water wave, but it is getting bearish, and it can also reach this water curve. So this is my analysis on DXY, Nasdaq, S&P 500, and US 30. If you enjoyed this analysis, you know what to do. Please support this channel. Please support this analysis. This has given you a lot of insights, I hope. So make sure you share it with other traders and trading communities, because they can also benefit from this. And have a great trading week next week. Thank you for watching. Find and follow us on these social media channels.